All right, good evening, folks. Happy New Year. It's the 12th of January, 2026. The time is just after 9 p.m. UTC. Give me a quick shout out if you can hear my voice and see my screen. I will kick off the first live stream of the year. And as always, a special thank you to Prime XBT for sponsoring today's stream. Anything said in today's video is not financial advice. It is essentially just my view of the markets. And for those of you who joined the 3-month mentorship that I'm doing in partnership with Prime XBT, thank you very much. And for anybody who has been wanting to join but didn't see the form, then I will be making that available over the next few days, probably Wednesday, Thursday, or Friday. I'll make an announcement. So if you still want to join in, then I know quite a few of you were DMing me, asking me to join. That window of opportunity will be there until the next few weeks, and then we're going to close the forms down and then kick on with the mentorship group, okay? Now, in today's session, I really want to just start off looking at the monthly time frame on Bitcoin. And I think just early on in the first 12 days of the trading year, there's not really been a great deal of volatility. And, you know, from a monthly perspective, you could argue that, yes, the market structure is still fine. We do have a key pivotal swing point here from where we broke out from this 1.5 year accumulation range. This was from June 2022 all the way through to October 23. So 1.5 years before we saw Bitcoin start off in this bull trend. We saw that corrective phase in 2024 before we saw continuation into another swing high, followed by another swing low into another swing high. And then we've got this deep retracement, which really, you know, to some people came as a surprise, but I explained my views multiple times on the streams that I'm not too sure if this is the area where we want to be getting bullish at 124, 125. The simple reason being because if you look at this from a monthly time frame, what was the clue in the market? The clue in the market was the fact that every time Bitcoin traded above that 116 level, doesn't matter whether it was in July, okay? This was in July, roll it forward another month later or 2 months later, you can see that effectively price was trading around that level, pushing it back above, closing back below. Now, again, one of the key things that I pointed out back then was that generally speaking, and I think this is really useful to take into consideration, I know I keep repeating it, but repetition is the only way where you can truly understand the basics of price action without really getting confused about what's happening in front of you. And every time we've seen Bitcoin on the monthly time frame print these large wicks, they've often led to key inflection points in the market. Whether you are looking to long the market, where you're looking for signs of seller exhaustion, where you're looking for the fact that buyers can no longer push the market higher and sellers are stepping into the market. You can see another incident of that happening throughout the summer of 2024, where every time Bitcoin traded below 58,000, it was very quick to close back above it. Anything below 58 was short-lived. Generally, when you see that, it's often, or more often than not, a sign that the market is likely to reverse. Again, we saw that in October 2024. November into December. Okay, price sold off. What do we get? March, April. Okay, this is during March and April. Wicks at the lows. Couldn't find acceptance below 81,000. Price makes a new higher high. Somewhat of a divergence here when you look at various oscillators. But the key for me here was the fact that this was in July. This was the candle for August. Every time we traded back up into this level and rejected, it was further evidence of a potential corrective move or signs of weakness. And now you can go back and look at my streams. That's something that we covered in detail, week in, week out, or for the times that I did stream. And the point I want to make is that, well, we've seen that happen on the upside. So I suspect that the next big inflection point is what I'm looking for in terms of something to the downside, where we're seeing signs of seller exhaustion and buyers just managing to hold up the price. Now, again, you can see what's happened here. 1, 2, 3, 4 times we've rejected from this level. The minute we got back under 116, okay, that for me, and I've pointed this out on multiple streams on the public stream, that for me was the big cue in the market that we just can't seem to get above it. That's it. It's you've got cause for concern to the downside. Now, looking at price at where we are from a monthly time frame here, again, this is kind of in no man's land. We're neither at support, and we're not really into this key resistance where you can see price was previously being capped by this 101, 102 level. Sorry, that's really where my level should have been today. Let me just readjust this. This, for me, is a level of resistance. Okay, so from a high time frame perspective, if I'm looking for swing trades, I'm not necessarily looking for intraday rotations or intra-week rotations. I'm actually now shifting the way I trade. So in Q4, right, my outlook for Q4 was that I think we're going to see plenty of volatility. I think we're going to see a rotational market. The fact that we kept getting inflection points, and I think that the risk, and I clearly stated this, that the risk for me is to the downside, that if we do get a move to the downside, then for me, I want to take advantage of that. Okay, so now that we've got that, now what? Okay, what's next? Next is essentially, look, I don't know whether we're going to go lower down, and I couldn't tell you if we're going to go higher up from this point in the market. But what I can tell you is that from a trading perspective, if this is the high and we come down and break through, and I do believe that we've broken structure on the weekly time frame. Some of you may disagree. You know, many people may advocate that, oh, look, EXO, isn't this still a higher low in context of price? For me, this isn't, because the fact that we've traded higher up into these equal highs and then saw the rotation down from 112 down into 98, that's effectively a $10,000 to $12,000 rotation. That for me is the breaking structure there. The fact that we kept printing these higher lows, another higher low, another higher low. We saw the market slowly starting to fade the momentum into a range-bound environment. The minute we broke through this range here and we traded below these lows with acceptance, that for me was the shift in structure. So what am I looking for now? Am I bearish? Am I bullish? In all honesty, it doesn't really matter whether I'm bearish or bullish, because as a trader, my objective is to trade the market, whether that's to the long side or whether that's to the short side. Now, I could be effectively looking for longs, but where price currently sits, and if you look at where price has found support, it's at this $85,000 level, okay? For whatever reason, whether it's Sailor, whether it's participants in the market, okay, doesn't really matter. But the facts are there in the chart that every time price trades into this level, price has been absorbed, okay? Any selling has been absorbed. Buyers are willing to trade at the market here in terms of absorbing any selling, okay, and holding the price up. So clearly there's some level of demand here. Now the question is, does price then start trading back higher into this key previous range high where we saw rotation from 105, 106s all the way down into 75s? And I do believe, I think this could very well be the trading range for large parts over the next few weeks heading into February. Give or take, we might get an overshoot of the highs, we may get an overshoot of the lows, okay? I'm not saying that we are specifically going to trade right into this level and that's it, it has to reject. But the point is that from an inflection point of view, we've got a large inefficiency here up until 102s. And so if we do get a move up into this key level of around 102s and price starts rejecting from there, then this is a zone where I'm looking for weakness from buyers, where buyers are no longer able to push price higher. And what would give me further clues as to, well, I don't really believe in this rally being a strong rally higher, because what's causing the price to move up? So one of the things that I'm actually looking for is this move actually being fueled or driven by spot participants and participants in terms of futures lifting the offers, okay? Or is it a case of not just lifting the offers, but are shorts unwinding out of their position where price is going higher and CVD is going lower down? That tells you, well, this isn't essentially all driven by organic demand in the market, other than the fact that, well, anybody who's short in the market here and who's hedged out, they're probably closing out their positions. Then I'm looking for the fact that, well, okay, now we've got an unwinding of late shorts or hedge positions, okay? What happens at this key inflection point if and when we get there first, okay? If and when we get there first, it's a case of, all right, are aggressive buyers now stepping into the market and are shorts being squeezed? And how much activity or how much volume is being traded here? And for all that effort that we're seeing at this level, is there enough evidence to suggest that we may get acceptance and continuation higher, opening the gateway to then trade from 102s back to the highs? That could certainly happen. But for me, the key inflection point is going to be at this range high, where if this is a lower high from a higher high into a break of structure low into a lower high in this context, then I think that opens the floodgates for a potential rotation, at least back down to the mid. And if we're going to trade up and then come all the way back down to the mid, I don't see how. Well, you know, we can't assume that it has to, but I think the probability is fairly low that these lows under here remain intact. I think there's a good chance that we could see a heavy unwinding of whatever inventory was built up here, with the stops probably resting below this level. And the minute you trade into these stops, what are they? They then become forced sellers, okay? Those forced sellers with breakout shorts is what's essentially going to fuel the market lower down, unless from a market perspective, from the market dynamics, unless there's enough demand just below these lows here to soak up any aggressive selling, which then we've taken out these lows. We're almost into these double bottom here. Is this going to be the reaction that's going to send the market higher? So it's a case of, do we trade up first? And if we do, then this is the level that I'm looking to trade. Okay, and I've explained why or what I'm looking for. If it's continuation from the 103, just lost connection there, so just give me a second. All right, we're back. Are we back? I just lost my connection there. Just give me a confirmation in the chat when you can see my screen again. Not too sure what happened there, to be honest with you, but there we go. All right, we're back again. All right, cool. So look, the point is that, well, Alexa, why are you putting so much emphasis on this level here? Why are you focused on this 1 or 2? What if we go through the level? Yeah, fine. To give me conviction that we're going to go significantly high. If I see aggressive buys coming in at this level and there's some stacked asks, okay? Shorts or sellers are clearly either offloading, and are they then starting to push the market down? If they then start pushing the market down with a lot of effort and aggressive selling, but price doesn't seem to get very far, and it pushes back up, what do you think is going to happen to all those aggressive sellers at this level here? So it's going to be a combination of longs taking profits, aggressive shorts stepping into the market, okay, hitting the bid. But if they can't push the market down and it gets absorbed at this level, then it's not really going to take much effort to push the market higher. Yeah, I'm not sure what's happening. I think I don't know whether YouTube's fucked or my system's fucked or I've run out of memory. Maybe too many Claude GPT commands running in the background. But yeah, it is what it is. Not sure why that is, to be honest with you, but that's life. What can you do? 56k internet connection. Get out of here. It's not 56k dial-up. It's less than that. It's 23.6. Remember the old dial-up when you're on the internet over a dial-up and then somebody's trying to call your house but they can't get through? Bad internet in India? Nah, mate, India's got much better internet. Those fuckers are scam calling me every day. They haven't got bad internet. I'm the one who's got bad internet. They seem to give... I got a prank call this morning, and that was a funny one. Gave him a few pleasantries back. Asked him how his parents were. But it's all good fun. All right, is the stream back on now? Are we good to go? Are we going to crash again? Yeah, there were fun times when some fucker's trying to call your house, but you've got the internet on because of a dial-up, and you'd have a two-way filter. Good times. Yeah, good times. All right, look, I think we're back. It might drop again. I don't know. If it does, then it is what it is. But look, at the end of the day, one of the things that I'm often looking for is aggression in the market. And if that aggression is unable to take price or move price significantly, then that tells you that larger participants are the ones who are probably in control, okay? So, look, long story short, I think this is a key level. Now, you're probably going to ask me, why are you focusing on this one level here? If we are in a continuation of a downtrend where, you know, we often see a pattern of drop, base, drop. I've talked about this in previous streams where if you look at what happened in 2022, okay, this was absolutely horrid to trade because look how many times we rejected from this 45k level. But what really caught many people off guard, and I fully remember this because to me this was just continuation to the downside, is the fact that, oh look, we have in the market a range, okay, but in the range we are making higher highs, equal lows. Oh look, we've made a higher high, this is bullish, let's fucking go. But not necessarily, because this breakout here, if you look at the candle tells you all you need to know. If you've got participants in the market that are shorting in the underside of the range, where do you think the likelihood for their most obvious stop placement is likely to be? It's going to be at these highs, okay? And so if you look at what happens with this candle, once these get taken out, this is all driven by shorts getting squeezed out of their position. This isn't necessarily bullish. When you see a move like this, okay, in the market, that takes out all the previous highs, runs a bunch of stops, these stops, okay, if you're short in the market and you've got your stop there, what are you effectively doing? You are then being forced to buy back into the market. And so one of the key signs when you see a big candle like this, okay, with clear momentum, is you want to really be checking the open interest, okay, and so you've got your open interest and you've also got potentially, I'm not really a fan of CVD, but there are times when it makes sense at these extremities. You can also look at your relative volume, okay? Do we have a large spike in the relative volume? In fact, let's just use one of my good friends' indicators here, BTC Charlie. I see you on stream somewhere. So there's we've got the relative volume indicator here. I know this is on Bitstamp. It probably would have been better using Binance, so we can certainly switch over to Binance and see if we can ascertain anything from the relative volume in this instance. All the way back here, okay? So, again, what do we have to work with here? Well, there's not really a great deal looking at this. So, initially, when you look at this from a relative volume perspective point of view, let's just go over here. There we are, okay? Not really a great deal, okay? Not really a great deal, but there's enough there to suggest that, all right, look, we've had a spike in volume. We've just taken out all the previous highs. And the reason I'm going over this, because I think there's a decent chance we could see something similar play out in one way or another, where price trades above the highs. Okay, this is your thrust candle above. But look at the continuation thereafter. Why is it that price cannot seem to continue trading higher? More than likely that this was driven by a short squeeze, okay? And then you've got sellers that are stacked, passive asks in the book, absorbing any breakout traders getting their positions filled, okay? And that continues to be the case. You can see how this level is defended. We trade back into the zone. We push back up again, okay? Second time around. But for whatever reason, this is all being capped. When you see a lot of buying effort not being able to push the market higher into a bunch of stacked asks, that often serves in more times than not, especially when you are not in a trending environment, when you are in a bracketed range-bound environment. That's the risk for the rotation to at least to the mid of the range, and then if that breaks down to the range lows. So the beauty of what I'm saying is that it's at these inflection points you can really get an insight, whether you're using footprints or order flow, to understand the dynamics of microstructure and what's happening in the market. And the reason, like I said, is why am I going over this example? Because it wouldn't surprise me, again, like I said, if you look at the structure here, we've got these equal highs, another high here. We've got a bit of a supply zone because this was the origin of the breakdown. This here on the left-hand side was the compression before we got the breakdown. There's a compression. Did we ever retest that level? No, we didn't. And when you get a really good breakdown of the market, you're never going to get the perfect retest, because the perfect retest here would have been, all right, we've broken down, underside retest, trades back above, gets back below, you can probably start shorting that. When you see the market stopping short, leaving a level of inefficiency, and what you will find on a footprint chart, on a footprint chart, yes, and a market profile chart, is this area here is probably all going to be a bunch of single prints. And so what you're looking for is price to trade the edge of the single print, and you want to see that cap price from further continuation, where in terms of structuring the trade, you could use the other side of the single print region for your stop placement. So that what I'm effectively saying is that, all right, if price is going to reject from a fair value gap, for those of you who follow ICT, I personally don't, I prefer to use market profile and single prints, is that, all right, if price is really going to start pushing up into here, then if we start trading above there, fine, I'm going to close the trade, because I was hoping for this zone to be the level where I'm going to see rejection. But however, if we start seeing price trading back below the level, I can then step back into the trade, stop at this particular high, or whether you want it to be ATR based, entirely up to you. Then we're looking for the big move down. But in the event where, and this is a common sign, and this is actually true for the market when the market is trading higher or lower down, okay, where you have a level of inefficiency. So say, for example, if this is our single print, if I now inverted the chart here, it's equally true on the way up. So here you've got a sign of compression, right? The market's compressing, okay? And you get that breakout. You get the breakout, you never get the perfect retest. But what you will get a retest of, in more cases than not, is a retest of the edge of the single print. And when you see a reaction from there, that's often a sign for me to, all right, I can start putting on some size, because my expectation is that we could see continuation higher. That's one of the ways in which I latch on to trend continuation. So we break up, you can see where range bound prices in this level, between this 41,000 and 44, obviously the chart's inversed, but we're never trading really back into the single print. So the demands, whoever's looking to buy at the market, clearly the bid has been moved up to this level here. They're chasing price. They're supporting price. Buyers are willing to step into the market. So in this instance, it's the same case with sellers. All this compression, all this buying that we saw take place, okay, has led to a breakdown in price. This here is participants rushing to get out of the market. And then all that supply, because you've got all this buildup of positioning happening here, looking for continuation of the market higher, they're offside. So what do you think they're going to do? They're trying to get out at the best available price at the market. And so sometimes you'd never get a true retest of an underside, because that's essentially what you would like, but that's not what the market is going to give you. And so the point I'm trying to make is sometimes when you see that, this is a sign that there's actual structural weakness in the market, and that's something that you want to be looking out for. So let's go back to where we are in terms of the market today. Back to the daily. So my point is essentially that, okay? So if I go back to my high time frame levels once again, which I hope I can bring back, and do I have them? Can we revert the changes? Yes, we can, okay? So going back to the weekly now, and what I was talking about, and specifically the weekly, here's another indicator that's been put together by my good friend Charlie on my behalf, which is the 1221 weekly scanner, the 1221 weekly EMA. For the first time in the market, just as we saw back in 2022, okay? I'm not saying that we're going to get a repeat of this structure, but really what the point that I'm trying to put across is that, look, if there is an inflection point in the market that you really want to be paying attention to, okay, and the precondition is such that if price, just like you did in 2022, where it mean reverts back into the bands, and we don't really see any acceptance of price, there's a real lack of volume, there's no real initiative to take the market higher and we start trading back below the bands, back inside the range, then I think that's a warning that the market is likely to retrace the move, potentially take out these lows and trade into this low here, okay? I'm not talking about what happened thereafter, but I'm talking about the context of, look at the market structure here. This is the range that we are in. We've tried to push above the range, above the bands on the weekly time frame. Where did the market break down from? Well, the market traded here, consolidated. This is your supply zone. Then we saw the second leg down, mean reversion into the bands, failed to find any initiative of continuation. Market rolls over, retraces the entire move in 1, 2, 3, 4, 5 weeks, okay? All this range-bound price action was retraced, and then we saw continuation of a breakdown. This is your classical drop, base, drop pattern, okay? Just as we saw in 2024, late 2023, you've got your base, okay? You've got your rally, base, rally, another base, rally, okay? So this is now for me a breakdown. Are we now starting to base out? It remains to be seen. But again, what I'm looking for is potential weakness heading back into that 12 and 25 weekly EMA band. And I think if we trade up there first, I don't think that's going to be positive in my opinion. I suspect if I had to flip a coin, and again, this is just a loosely held opinion, so don't take this as gospel that, oh, XO's bearish here. All I'm saying is that, look, if we start pushing up into these bands here, up into the 12s and 21s, and we kind of trade the previous range highs where there was, you know, a level of supply, turn into, we broke down, we found support. If this is where we're going to reject from, then watch out for price showing weakness. First of all, back below 1 or 2s. Then if we start trading below the bands or into the bands and that fails to hold, you're probably going to get a reversion back down into these lows here, okay? Now, the flip side to that, the scenario that I would want to see to get long is, again, just based upon the higher time frames here. I don't want to get caught up in any of this bullshit price action here. If you look at the 4 hour, the 1 hour, it's been absolutely dog shit to trade, okay? I'm not touching this market as it stands. I've got no interest in doing any business here. And it's very similar to what we saw in terms of a low volatility environment, thinnish liquidity across markets, okay? The market still seems to be hungover from the effects of October the 10th and a clear loss of confidence in the market. And so I don't really want to be caught up in any of this. I'm looking for these high time frame inflection points. And where's that high time frame inflection point? Well, again, if you look at the market here, what was the origin of this entire leg down? It was here, wasn't it? This here moved from 102, this candle here. This was the origin of where price broke down, okay? And if you look very, very closely as well, you will probably find that there is a small but slight level of inefficiency here. And if I mark that out in blue, again, look at this last low and look how price trades through this level with a fairly expansive candle from 101s down to 98s. But if you look very carefully and very closely, we never really retested this level. So for me, there's a thin level of inefficiency here that I think could get tested. And should that get tested, and we see price starting to stall between 101s and 102s, then it's in this zone where I'm going to be looking for structural weakness from a order flow perspective to give me indication that, all right, look, the market's rallied here from current levels into this zone, but we've seen signs of exhaustion. A lot of the move up from 96 to 101 was essentially shorts closing out their position. So CVD is rising, open interest is declining. That's not essentially demand in the market. And then what you're looking for at these highs, okay, is open interest rising, longs opening, okay, CVD going up, open interest going up, but price is being absorbed. And for all that buying effort, why is it not going higher now? For the first time around this region, we are seeing buyers step into the market. Well, that tells you that larger entities and commercial players are looking to sell off some of their inventory here. There's still a battle going on. And it's really a case of, well, whoever has control of this zone that's going to be traded, are sellers going to overpower buyers? And is it a case where anybody who's buying late at these levels here, who's chasing price up, are they then, okay, if you've been buying here, here, and here, and then price is starting to get pushed lower down, I don't think you're going to be sat in your position waiting for price to trade even lower down before you cut the trade. The chances are that many participants will unwind their position. So where they're trying to get long and building inventory, and then they see price pushing them offside, human nature, okay? The chances are it's going to get very uncomfortable for them. Then you've got others who have got in from significantly lower down, from 82, 83, who are then thinking about, all right, you know what, I think the move is done. I'm going to look to become a seller. So it's not essentially shorts just opening into the market. It's often buyers. Once you've become a buyer, what's the very next thing that you do? To take profit, you become a seller. And when you're selling the market, when you're short, what's the very next thing that you do to close a position out? You become a buyer to net out your position. Okay? That's just the basics of market 101. That's how markets function. So, long story short, now that we've kind of understood some of the context that I'm looking at, what does that mean from a trading perspective, XO? Well, moving forward, okay, I think, like I said, for me, this is the key range that I'm focusing on, give or take, okay? We've got a level of inefficiency here. This is a zone, or the zone that I think we could potentially trade over the next several weeks, okay? If we're going to go higher, then I need to see acceptance, or I don't mind price pushing up, okay? Pulling back into the bands, showing me some sort of structural development. Okay, slow grind up, acceptance, another pullback, acceptance again. Then I think, you know what, this is one of those patterns where it's going to be something like this, okay, where you get a move followed by an aggressive thrust higher to take out these highs. That's the bullish scenario for me. However, if we do find rejection around this zone here, between 100 and 102, pay very, very close attention to this supply zone, okay? Where we may get this being the range to trade, and such that we trade the extreme down to the other side and trade the other side of the extreme. This is where I'm looking to do this is where I'm looking to do business from a long perspective, and this is where I'm looking to do business from a short perspective, should I get the trigger. Not that I want to short, but should I get the trigger with the reasoning and my execution strategy comes into play, then I'm looking to short the market back for a mean reversion play, and I'm looking to long the market if there is an extension outside of this bracketed environment that we've had for 2-3 months, whenever that is. Okay, we've clearly been here since November, all of December. We're already almost like mid-January in a few days' time. So this is already 2.5 months in by the end of January. So, you know, it's a question of if it looks like a range and it trades like a range, then it probably is a range. And for that reason, I'm looking to only do business at the extremities of the range, looking for those big swing plays. Okay, so the short scenario for me is if we get some inflection point at the zone of 101, 102, 104, okay, with the signs of rejection or absorption or buyer exhaustion, then I'm looking to fade the move and look to become a seller for a good, you know, rotation back down. I don't really believe in being a proponent of this risk to reward tool, because for me, this is bullshit. This is essentially assuming that you're trading very statically. Okay, for me, I like to be fairly dynamic, but if I can get an entry here and price is rejecting, then I can probably add more size down here because I'm buffering in a winning position. And dynamically, I can keep my risk static because now I'm taking another position, dynamically moving my stop, doubling up on the size. My risk is still static. Okay, I'm still risking 0.5%, 1%, but I'm looking to add to a winning trade because I believe the probability now is going back to the range lows again. Okay, that's how I compound into a trade. That's why 4 years ago, the Trader XO of 2021 would have traded like this, but now where I am in terms of my development as a trader, I'm looking to trade very dynamically when I believe I've got the market by the balls. Okay, not that I ever have the market by the balls, but when I believe that the probability is heavily skewed in my favor. And I only know that because of my back testing, having traded ranges for the last 8-9 years. Okay, this is my 10th year of trading. So I fully understand what the flow semantics look like, what the dynamics look like at the extremities of these range highs and range lows. And that is going to come over time, okay? You have to journal your trades. You have to review your trades. I've said it time and time again. Think of yourself as somebody who's a boxer. Okay, you cannot get into a boxing match. You've been in the gym, you've been sparring, you're doing all the bag work, okay, you then go into a few amateur fights, okay, you've won all your fights. Are you telling me that when you step up into championship level, that you're just going to go into the next fight and you're not even going to review any one of your previous fights on tape, to watch the video, to find out what you could have done better? What patterns did you see that you were making? What mistakes were you making? Did you keep dropping your guard and you keep getting caught on the chin? Okay, and it's the same with trading. That what can you do better from a trading perspective? What patterns do you see emerging every time you trade the extremities of the range? How can you really refine your execution? How can you get more size on? How can you dynamically trade back towards the mid? Can you be more aggressive? Okay, there's so much more you can do with your trading as opposed to it being, oh, you know what, I'm going to short this here, I'm just going to leave my stop there and let it ride all the way down. Well, if you believe that the market's going down and you've got good conviction behind that, size into the trade on the way down. Adding to a winning trade is something that people are not comfortable doing. But it's funny how adding to a losing trade or dollar cost averaging into a losing trade seems to be acceptable. If you look at XPL, pile of shit that was getting shilled at 105s, $1, and dollar cost DCAing, okay? Number of times I saw that on the timeline. And when you look at it really, hypothetically, I just don't understand why people sometimes can't see from a structural perspective, from a moving average perspective. It would have kept you on the right side of the market, whichever way you look at it. Okay, so why is it that we're always comfortable adding to a losing trade and dollar cost averaging in, but we never seem to want to add to a winning trade? So shift that mindset, because this mindset of adding to a losing trade is what 80% of people do. But the 20% elite who are seasoned traders who do really well, they're not looking to add to their winners. They're looking to get out of their losing trades very quickly, and they're looking to compound onto their winning trades. All right, something to really think about. So again, when you can journal and review and see how effective you are at trading these mean reversion plays, then there's so much more you can add to your trading as opposed to being very static. You can certainly become far more dynamic. Okay. So I think overall, when you look at the weekly time frame, this is the first time when I look at the market and I think, you know what? The risk for me is that if we get a squeeze up followed by a rejection, what does that mean? I think it means we could potentially trade back into this level here, essentially. All right, that's the risk. And if we get acceptance above that 104, then that brings these highs into play. So again, like it or not, this for me is a form of level-to-level trading, okay? I'm looking to trade from one zone to the next. And by doing so, guess what? I'm not the one who's suffering from 10-10 on the way down. I've managed my risk. I'm thinking about the markets objectively, okay? And that's all that matters to me, that when I really look at this from a range perspective, this is what I'm looking at here. Ultimately, all right? This is one trading zone. This is another trading zone. Let's just keep it very simple, very objective. There's no point in talking about how I think price is going to go all the way back down to 49K. No shit, Sherlock. But to get there, we've got to break through this level here first. And there's no point in telling me, hey, XO, I think we're going to go to 130s by the end of Q1. Well, guess what? We've got this level to deal with here, okay, where we saw supply previously come to the market for it to make a higher low into a higher high. But this for me is the breaking structure. So again, the moving averages align with this key level and align with this key market structure break, such that if we get an over and a back under, that for me is a concern in the market that we're probably going to, not a concern, but I don't even want to call it a concern, because look, at the end of the day, I think lower prices on Bitcoin is a gift. Because I do believe this is an asset that will go to $150,000 to $200,000 in the future. So I think any deep retracement on Bitcoin, the way that I'm looking at it is, whilst many would perceive this to be bearish, I'm thinking of, yep, you know what, bring it on. I'd absolutely love to buy lower prices. That's generally how I'm looking at the market. Notice that how when price was up here, I wasn't getting carried away with being bullish. I wasn't telling you, oh, we're going to go to 130, 140, 150. You know, let's all get our fucking Bitcoin flags out and celebrate. The very fact that I was seeing rejection on the monthly time frame and vocally talking about this on the stream and on a couple of tweets, that I'm not convinced. you really want to be cautious about the downside risk. So again, if we see the market selling off lower down, then obviously I'm going to be interested. I'd much rather be more bullish from lower down than becoming bearish on the way down, okay? So that's something that I just want to leave you guys with. And I think what I'm going to do is just follow my system. And my system, until the bands show me strength in the market, then fine. I'll start looking for longs from higher up, or I'll look for longs from lower down. But where price is, it makes sense to me. I'm not willing to chase this here unless we get price taking out these local lows first and then showing strength. And fine, I'll contemplate a long, okay? But from where we are currently, I'm just looking for price to trade back into this SR level or this range high, somewhere in there. It's vague right now because we're nowhere near that level, but that's kind of the zone that I have to identify. So basically what I do is I try to identify the zone that I'm looking to potentially do business in, okay? Not that I'm looking to trade straight away, or the fact that price is trading into this zone here between 102 and 104. You know, some guys, one of you is going to, I know what's going to happen. You're going to ask me a question. Hey, Exo, I thought you were looking to sell 102 or 100 to 102. What happened? Why did you change your mind? Well, clearly, simply put, I said I'm looking to do business at this zone, but I need to see a reason to act upon that trade, okay? Just because I'm looking for price to trade into here is not a good enough reason for me to take on a trade. I need to see what price does at this level on the order flow, on the microstructure, okay, and what the flows are telling me to consider or to ascertain whether this is something that I want to sell versus actually, you know what, I don't want to sell this. I think I'm far better off waiting for a pullback now, because this is now a shift in structure. We've got this low, we've got a higher low. I'm now looking to trade the rotation up into a higher high, taking out these highs potentially into this high here, and then we'll see what happens, whether it's a double top and we break down, or whether it's another 3 drives higher, 1, 2, 3. I don't care, okay? All I'm looking to do is trade the market. From a spot perspective, I would absolutely love to buy lower down again. And if that happens, then I'll just send it to my cold storage. I'm not looking to trade my spot bag. This is purely for trading on perps and derivatives, okay? All right, and I think that's going to be it for today's stream. We can have a quick look at some of the oscillators. I mean, there's not really a great deal happening in the market. In all honesty, I'm looking at the weekly time frame. I do suspect that at some point, as long as we don't trade below 85k again, that I would like to see the weekly RSI, the weekly stock RSI, oscillate to the highs. And if it does that, and if we start seeing signs of rejection around that 102, 104 level, then I think this is going to roll back down. And that for me is a momentum play back down again, okay, into these lows here. We've got a slight inefficiency there. Okay, that's the level that I'm looking to trade this back down into. Alternatively, you know, if you look at the daily, I do like to use the stock RSI in terms of timing my rotational plays. When I look at the daily, it doesn't give me enough to give me the conviction that I want to be long in this market. Perhaps one of the ways that I could consider a local long is just mapping out this as a local range low in the wick. We've got these lows here. And what I'd be looking for is the fact that, all right, from a range trading perspective, here's what I would do, is that if we do come down and trade into these lows, take these out, okay, probably fill in some of this inefficiency, and I see aggressive selling here being absorbed by passive buyers, and there's a spike in relative volume, that's probably going to tell you that if you see a spike in relative volume, and if you see aggressive selling on the footprint here, okay, and you see passive bids stacked in the book absorbing all that selling, that probably tells you one thing. This isn't shorts essentially piling into this position. It's probably going to be people with their stops resting below these lows, okay? And with that, when they get pushed offside, they then become aggressive sellers because they were long into the market. So they're becoming forced sellers, and large entities or commercial players are taking advantage of getting their positions filled, because anybody who's been long in here and has round-tripped the move, and there's enough passive bids resting here, and I see signs of absorption on the footprint, and we start seeing acceptance, that for me is the trigger. You know what? We've taken out these lows. Let's go and take out these highs here, straight into 96, 98s, and then let's see what happens after that, okay? The key to this is that if we do get the breakdown, is you really want to be seeing signs of buyers stepping into the market at this level. Because what do you think happens if price starts trading below this level here and there's no bids, there's very thin bids? What do you think is going to happen to price? It's probably going to take out this low and trade into these lows here because there's no demand there. You need to see demand in the books, demand coming through on the footprints to suggest that, yes, there's enough interest to absorb all this unwinding of positioning that we saw players or participants get long who are now puking their position. For as long as there's enough demand there, we can absorb and soak up all that selling pressure, and then the larger players will start lifting the offers. Anybody who's caught trapped shorting this down here is probably going to puke their position higher up. That's where you get these big spikes because compression. Eventually, these lot who are shorting late down here, they feel enough pain. That's your cascading liquidation, rattles the highs, then we'll see what happens up here. Okay, that is essentially how markets work as far as I'm concerned from a range perspective. And if, like I said, if it looks like a range, trades like a range, it probably is a range. All right, and that's it for today's session. Thank you very much for tuning in. I wish you all a blessed new year ahead and a fabulous week for the foreseeable future. Take care, guys, and I'll catch you on the next stream, whenever that's going to be. God bless. Take care.